Hey YouTube, so I'm about to go live on all the platforms. I'm going live on well, not all, two. I'm going live on TikTok and I'm going live on Instagram. And I am going over some approvals. I was able to get like 3 clients approved the day before yesterday for a $20,000 credit card with First Tech Credit Union. So yes, I'm just giving the people some game here. Cause I had to see, you know where the bag at? Tell me where it is. Hey y'all. Let me turn this down. Oh, it's going up, not down. Hold on, y'all. I can tell you how to talk the most impeccable shit. Let me turn that down. Hi, how y'all doing? So share this live with somebody. If you know somebody that needs funding or they're interested in funding or they have items on their credit report or they're trying to get access to capital, make sure you share this live because I'm going over a specific lender that I used maybe 2 or 3 days ago. I got a few people approved for literally the same exact limits, and I'm going over the data points. Those 3 people that I got approved literally in the same day, they all got a $20,000 credit card with this particular lender. So share this live. I'm gonna give you like 2 seconds. Send it to somebody. Tell them to join. Get on here right now because they need to get this information, y'all. It's really, 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 really good information. Like I'm about to break down how people are positioning themselves to get approved for the high limit cards because this is not your typical situation. Most of the time when you apply for a credit card, you probably got approved for like $300, $600, something like that. Well, these approvals are totally different, y'all. We talking about a $20,000 approval for one lender, one credit card. Now, some of you guys on here don't even have a credit card with a $20,000 limit. You are only used to maybe 600, 1,000, 3,000, those type of numbers. Well, it's a few factors that go into why you're getting approved for such low limits. Now, how your file needs to be structured plays a huge role in all of this. People tend to think that getting approved is all about having a high score. For some reason, people are infatuated with that idea. They are under the impression that if I have a high credit score, that's automatically going to get me approved. And that is just not true. Banks are going to look at your credit profile in full. They are not taking into consideration anything about you outside of what they can see on your credit profile. Now, your score could be a 720, but your profile could still scream that you are risky to lend to. Okay, so it's all about the details of the profile. Tonight, basically, I'm gonna go over what's killing the approvals, how you can get access to this $20,000 limit, one product, one credit card, and how to build a funding ready profile. Okay. Now, to be honest with y'all, banks want to see stability over anything. Like banks want to know that you are a stable person to lend to. They want to know that if they're giving you their money, you are going to give it back. They don't want to look at your credit profile and you already look risky. Well, what's the point in lending you $20,000? It actually doesn't make sense, okay? So we want to look lender friendly to these people when they are looking at our credit reports. So the first thing I want to cover is low utilization. A lot of people skip this one, and this is why you don't get approved for the high limits that you're trying to get. When you apply for a credit card, if you are anywhere near maxed out, you should not be submitting the application. All right. Do not submit applications on any of your profile. When you look at that credit profile before you submit anything, make sure that your credit cards are not maxed out. If you are maxed out on any account, that is a reason to deny you. Now, when it comes down to utilization, I'm going to tell you what elite status is, right? Elite status is under 10% utilization. That's elite credit status. Now, if you are more so under 20%, that's good still. And that's actually the requirement for funding. All right, we want you to be 20% or below. If you are over 50% utilization, you are high risk to lenders. And if you're a past anywhere 60, 70, 90, you can forget it. It is way too high. So when applying or submitting applications, you want to double check all of your open credit card accounts. Now, when we talk about utilization, we are talking about open credit cards. We are not talking about loans. So I want to be very clear. When we're talking about having 10% utilization, loans factor into your credit score totally different than a credit card does. Okay, so we are not talking about loans. We're talking about all of your open, positive credit cards. Let me give you an example. If you have a credit card and let's say it has a $1,000 limit and you're using $900 of that limit that they gave you, well, that means your utilization is at 90%. That is way too high. You need to reduce that before submitting the application. You never want to submit the application and one of your accounts is actively at a 90% utilization. Even if you pay on time, you can have that whole idea in your head. Well, I make these payments every single month on time. That's cute, but the bank is still going to be nervous to lend to you because all you can afford is this minimum payment, and then you kind of exhausted everything that they were willing to lend to you. So it makes it a little bit risky for them. So that's why we want to keep the utilization low. Banks trust experience. When they look at that credit profile, they want to see a person with 5 years of history. And if you got 5 months of history on your credit profile, that's very, very new. Now, there are some things that you can do, some things you can add to the credit report to increase the age, but that is also important. For all of my people out there that are like, look, I don't have bad credit, I just have new credit. Well, you're going to have to do what we call adding trade lines. That is where you're going to add authorized user accounts to increase the age of your credit profile. Okay, so everybody needs different things. This is why joining my credit community is very important, because no matter where you are, we can tailor it towards your positioning and where you are today. Okay. Now, do not close old accounts, y'all. I see this a lot. A lot of people are rushing to close out their accounts. Sometimes you're under the impression that, hey, once I close this account out, my credit score is going to shoot up. Your credit score is actually going to decrease at first. As soon as you pay off an account, your credit score is going to drop before it increases. It takes it a little minute to shoot back up, but that is normal. Like, people plan on these type of things when it comes to credit. Authorized user accounts can help you, but you have to strategically place them on there. You have to know which banks allow it, which banks are relationship based, and they will actually take that into consideration and put you in a higher tier based off of you or being an authorized user of one of their accounts. Now, there are some banks that don't necessarily want to see you as an authorized user. There are some banks who love it. There are some banks who don't want to see that. And you need to know which banks those are. Now, if you have a mix, like you have a variety of different type of accounts on your credit report, then you may have a thicker profile. I've seen a lot of people in the 680-ish score range get approved, when I've seen people in the 700s get denied based off of how thick or thin the profile was. So if you have a lot of accounts on your credit report and your utilization is low, like the 680 range, you can get funded, okay? Now, applying too early, that is a thing. Everybody wants funding immediately, but if the profile is not ready, there is no point in submitting the applications. You're just simply going to be collecting denials and inquiries for no reason. You always want to do funding with strategy. Whenever I am doing funding for a client or I'm teaching somebody funding, it's not fluff. These are real strategies, real things that you're going to be doing to get yourself approved for these accounts, because we're prepping the file. We're making sure that the file is ready to get approved. We are not getting denied. So before applying, here's what you need to do. Make sure there are no negatives on the credit report. All right. That's the first thing. Second thing, you want to lower the utilization. All right. Third thing, you want to look at your own credit profile and see how many primary accounts do you have currently reporting on there. Next, you want to make sure that each account has seasoned properly. If you have a credit card account that you just opened 2 months ago, you need to let it season for 2 more months. Okay. We always say new accounts need to be on the credit report for at minimum 4 to 6 cycles, which is 4 to 6 months. So you want to keep that in mind as far as seasoning your accounts. Now, if you got an account 6 months ago, you're good. You're in the green. Go ahead, add Tradelines. It's time to go. Now, you also want to make sure that you stop applying everywhere randomly. If you genuinely want to be in control of your own file, you want to submit applications on your own behalf, then what I recommend is joining the funding mentorship, because you have full control. You're going to be submitting the applications. You're going to know exactly what to put. You're going to know which lenders you need to go to. You're going to know all of that good stuff. And then you'll also be able to do it for other people. But if you're not really going that route, then what I would suggest is to join the credit community, because it's going to build you no matter where you are. If you already have primary accounts, you're going to understand trade lines and how they work. You're going to understand what the credit profile needs to look like, and you won't be just randomly submitting applications. There are certain cards that you need before applying for other cards. For example, a lot of people ask me about the American Express hack, so to speak. It's where you get 6 cards off of one pool. Well, people are doing that wrong. Some people are like, that don't work. I heard about it. That don't work. It actually works. However, if you apply for the wrong card first, you'll fuck up your whole sequence. So that is very important. It's like you don't just randomly submit the applications. There is an order that you are supposed to follow. If you don't have that guidance or if nobody told you that information, well, you're now doing these things blindly.